Hello, chart watchers, and welcome to this Thursday, August 30th Market Watchers Live show with your host, Erin and guest co-host, Julius de Kempenaer. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's go ahead and take a look at what's going on in the market right this moment. Currently, as you can see, most of the major markets are lower on the day. We have the NASDAQ doing probably the best of all of them. It is still lower, but only slightly down, just a little over 5 points. Russell 2000, small caps also struggling right now. Most of these markets are sitting right near their intraday lows, and Dow Jones is down over 106.7 points. Treasury yields, 10-year Treasury yields are down currently, reading 2.866%. UUP, big gap up and is now starting to consolidate sideways. On the other side of the coin is gold, gapping down and attempting to make a little bit of a rebound here, forming somewhat of a symmetrical triangle. Of course, those are continuation patterns, and that could mean even lower prices for gold as we continue through the day. USO is mostly unchanged, but up 2 cents. The VIX is rising rapidly right now. We can see it is currently reading at 12.88. Right now, the leader and only positive sector at the last I checked is the utility sector, but it is only up 14 cents right now. We can see that it's up there because of we were looking at the Dow Jones US VE, so electricity and also just general utilities we're seeing are the leaders in that sector, which is leading them higher. All right, well, it's time to bring in my guest co-host, Julius. How are you doing this fine morning? Although I think in your area of the world, it is evening.
It is evening, Erin. That's right. It's 6 p.m. for me right now here in Amsterdam. And I'm doing well, actually. Thank you. Yeah, I'm delighted to be back. I'll be back here tomorrow with you as well, because Tom is out of town. So it's my honor to replace him, and I'll see what I can do. I've just posted a message on the Slido board that if there is anyone who would like me to talk about something more specific, probably related to RRG, then by all means, post these messages in Slido, and I'll see what I can do. And if I have a remote opportunity to address them, then I will do that.
Yes, I know you're going to be busy with the first part of the show, but yes, Julius is great. He likes to lurk in the chat rooms, so feel free to ask him questions there. He is pretty good about answering just about everything. And if you don't, we usually will send you the questions that came in, and you can answer them later for us. So
yes, I will do that.
Let's take a look at our upcoming schedule. First of all, on Monday, there will be no market watchers. Of course, it's Labor Day. When we come back on Tuesday, I will give you the monthly decision point review. We'll be looking at the monthly charts that have just gone final. Tim Ord will be with us on Wednesday, and nice later add to the schedule I hadn't seen yet. Bruce Fraser will be joining us on Thursday. I'm sure Mr. Wyckoff will have plenty to tell us. All right, so let's take a look at today's agenda. Currently, sector rotation using RRG. That's what Julius will be coming back with us for. I'm going to do the biotech sector ETF, IBB, for the first 10 and 10 symbol. And then finally, we're going to finish with agree or disagree. And currently, the poll has that statement in there. So go ahead and take that poll. We'll be looking at it when we finish that segment to see whether you agree or disagree with either myself or Julius. All right, with that, let's go ahead and get started with some technical news. Let's get on this particular one I wanted to have right here. We'll just have the market summary up, but I want to go over some of the important economic news that did come out today. Jobless claims remain stable, low and favorable. They came in at 213,000, which was actually less than expected at 214,000. And the 4-week average is down 1,500 to 212,250, which is actually the lowest level since December of 1969. Personal income and outlays came in as expected. Personal income rose 0.3%, while consumer spending rose 0.4%. And as I noted, they did come in as expected. So those numbers are looking pretty good at this point. All right, in the headlines, and let's go ahead and take a peek at some charts here. And the first one I want to talk about is Amazon. Amazon, if you haven't seen the headlines, hit $2,000 per share for the first time. And this record high, of course, comes after that great 3.2% up move that we saw yesterday. And they're saying that that was sparked by the upgrade from Morgan Stanley. The company remains very strong, and they're really making a play towards Apple, which is, of course, has just become the first $1 trillion company. We'll see if Amazon can follow suit here. But when you're looking at a chart like this, I think you would have to agree that we probably will see that sooner rather than later for Amazon. I think my only key takeaway for this chart is that, we are starting to look at my dad was on Carl Swinlin yesterday talking about parabolics, and this could be annotated. In fact, let me annotate it really quickly here so you can see what I'm talking about. But we might be looking at a little bit of a short-term parabolic move in the making here. As you can see, it's starting to really curve upward. Usually parabolics, are going to correct very quickly and a lot of times painfully to the downside. I'm not really expecting that from Amazon. If anything, I would just suggest that we might see a pullback after some of these big moves to the upside. But hitting that $2,000 per share mark is pretty impressive. Of course, you do have the flat PMO because we had very steady acceleration on this last rally. But like I said, as we're getting into the end part of it, we're starting to get a little bit more parabolic in the shape of that rally. Currently, the PMO is on a buy signal, and you can see that it is just about, it's gotten past its previous top, still working on getting past the top prior as well as the one even before that one. So we're almost ready to break that declining trend on the PMO tops. So things are looking pretty good for this chart. It's really hard to get in here and say we're going to have a big correction just because we're seeing some parabolic activity here. I think that Amazon could certainly move higher at this point. Another stock that's in the news right now is Campbell's Soup. And let me get this one up for us. Okay. And they're in the news because they just sold their international and their fresh food businesses. But, one of their big shareholders, Dan Loeb, is actually saying, you know what, we need to do more than that. We need to just sell the company altogether. Campbell's is obviously struggling here. I'm going to go ahead and bring this chart up to annotate it for us. All right, so you can see today dropping below some very important support. I suspect we're going to see it fall further. We've already, you can see right here, this previous gap. We've already covered that gap up. I would expect to see this previous gap down also getting covered. I would look for prices to continue lower. I suppose if you want to get into the shorting business, this one probably would be a good candidate at this point. You've got the 50 well below the 200-day EMA. And despite this rally, it just wasn't ever able to get truly above the 200-day EMA. It really made some attempts here to stay and move higher than that, but eventually failed. And you can see the 20-day EMA is just about ready to cross below that 50-day EMA. So I would expect to see lower prices continue for Campbell's Soup. Notice that scooter really on the decline. I think we need to see the OBV maybe deteriorate just a little bit more. Volume is moving kind of sideways here as far as the OBV. And, seeing this drop in price and a relatively flat OBV, I would expect to see, the OBV travel a bit lower here to support this decline. And, we'll have to wait and see what ends up happening. But I would say looking in the thumbnail and seeing these declining tops matching up with declining tops here on price, that is confirming the bearish action that we are seeing right now on Campbell's soup. All right, another one that I wanted to look at is Electronic Arts, EA. In fact, I know that one, so I'll just put that there. Electronic Arts, their shares are plunging right now, as you can see. This is coming off of, they're letting people know that they are going to have to delay the release of Battlefield 5. I'm not really into the video games and that sort of thing, but apparently this is a really big game that they're supposed to have released already, and the fact that they're delaying it is a problem. And then they also lowered guidance when they reported earnings. So, looking at this chart though, and this is, I think, a really good textbook case for you of a declining or descending triangle. I mean, talk about textbook. This is really lined up. And the expectation, of course, off of one of these chart patterns is a breakdown. Of course, we got a huge breakdown. We're down over 8.75% right now on EA. And when you look at it, and if you were to do the measurement, that would give us a measurement of about $10 here in the height. So you would expect it to fall as a minimum. The minimum downside target for this pattern would be at about 115. And let's go ahead and put that in as our auto support resistance. And it does show up as, what was previously support back here in February, April, and May. So this is important support that it'll need to hold. But when I look at these indicators here, the PMO had just about made its upswing for a buy signal, but now it has done a bear kiss. It has moved down. We can see that the scooter, of course, is dropping like a rock, currently reading at just 7.1. So some serious problems here going on for Electronic Arts. I would expect to see prices will certainly test that minimum downside target about 115, but we could even see a drop further. I guess if you wanted to draw some support in here from these lows back in late 2017, and over here just an interim low that we got back in January, I would see that as a more likely area of support than at 115, just based on what we're seeing here. But the PMO is oversold. And maybe with the release, when they do finally release this game, maybe we're going to see a little bit of an upswing on it. But I would expect to see lower prices for a little bit longer here for Electronic Arts. All right, some key earnings that that we're going to see at the end of the market close today. First one would be Ambarella. This was, everybody knows me for Ambarella just because when it had its parabolic move, oh gosh, 2 years ago, I was writing quite a bit about it and, looking at those parabolics. So a lot of people know me as the Ambarella person at StockCharts, but I haven't actually watched it in quite a while. But we've got earnings getting ready to come out for Ambarella. And I think it's interesting to note, of course, we don't know what they're going to be, but it's been in a tight trading channel at this point. And so, if we get those earnings, I would expect to see that breakout. But, there's really not been a whole lot of interest here in Ambarella. And, we had that big gap down back in June. That gap needs to eventually be filled. I think there is an opportunity for Ambarella to do just that. But it's hard to say what the reaction will be to earnings at the end of the day when those are reported. But I wanted you to see the chart because right now the PMO looks great. We've got rising bottoms and flat bottoms on price, and that's actually a positive divergence. So this is setting up for a nice pop to the upside out of this, excuse me, out of this trading range. But at this point, not sure because we do have those earnings. I would probably want to wait to see what's going to happen. I generally do hold through earnings, whereas Tom will always not hold through earnings. But my trading style is more intermediate term, so a lot of times I end up holding through earnings. Cooper Companies is going to also report after the market closes. And I think this is a really interesting chart. We just got the PMO buy signal on it. And you can see OBV is rising, nice accumulation going on here. Of course, we recently had this breakout above that July top. It's pulling back right now. And this could be an opportunity if it does pull back closer to this area of support. It could be a really good buying opportunity just because of like I said, the PMO is looking pretty good right now. Again, earnings reported after market close. So, and others reporting after the market close would be Lululemon. And, we've been forming somewhat of a flag off of this rally. I'm not really thrilled with the fact that PMO has turned down here, but we are seeing that short-term support at about 135 holding up fairly well through the last half here of August. But they will be reporting earnings at the end of the day. Let's see, Ulta. Let's look at Ulta. Ulta will also be reporting earnings at the end of the day. Excuse me. PMO buy signal is in effect currently. I've got the 20-day is still below the 50-day EMA. So we still don't have an intermediate term trend model buy. And of course, we're seeing the 5-day EMA rolling over slightly just because we've got price underneath it, trading underneath that 5-day EMA. So it is trying to curl downward a bit. We'll have to see where it finishes the day, but wanted to just throw out that, yes, they are going to be reporting earnings after the market close. Another one reporting earnings, and also which falls on my downgrade list. So I thought I would start with Nutanix. It is reporting earnings at the end of today. And additionally, JP Morgan just upgraded it from underweight to neutral. So looking at this chart, we are on the buy signal. The PMO is certainly not overbought. We've gotten held up, though, at overhead resistance at that June high, and it is starting to pull back a bit. Let me go ahead and annotate this for you because I want to show you that support resistance lining up here. All right, so that's near-term support. It also somewhat lines up here with those early June top. So I'd be looking for a little bit of a pullback here. The fact that it is lower, though, on the day with an upgrade from JP Morgan, I feel a little bit of concern there because they are reporting earnings after the bell, and I have to wonder if there isn't some information floating around out there. But, JP Morgan did upgrade it, and it is near some important support currently. All right, another upgrade for us, Tilly's. Tilly's was upgraded by William Blair, and it was moved from a market perform to an outperform, looking quite good here on today's over 13.22% move. We've got gap up off of this flag formation, and it's already fulfilled the flag minimum upside target. And it is starting to pull back here a bit. The PMO isn't quite overbought. So I think this could be a good candidate, but I certainly wouldn't want to chase it, as Tom says. I would want to wait for it to pull back. I don't think it's going to close this gap. This looks like a pretty clear breakaway gap. So we could see it pull back maybe closer to the intraday low today before the market closed. This might be one to keep an eye on, see if we can get that pullback. All right, another upgrade today, AIMC, Ultra Holdings. This one was upgraded by both KeyBank Capital and Sidoti. KeyBank gave it a sector weight to an overweight, and Sidoti moved it from a neutral to a buy. Now, this is sitting at some pretty important, a drop here. It's at an important low, and you can't even see support on it from the past year. So I think it's rather interesting that we got two upgrades on this, but I want to look at the weekly chart just to give us a better idea of what we're talking about as far as support. And this is where it is. So let's go ahead and annotate this. All right, And then we'll look at just a few upgrades, downgrades. So I'm looking at these highs from back here in 2014, and you can see they also provided some support on the way up on this rounded top that we're seeing. So we're at some really important support here. When you move down 5.7% on an upgrade from two companies, it's that to me is a little bit of a concern. I don't know, maybe keep it on a watch list, see if it can't bounce out of this area and hold this area of support. That could be interesting. But for me, I don't know, that worries me just a bit. We had 3 downgrades, but we're getting here on the end of time for this segment. But I did want to let you know that GlaxoSmithKline was downgraded by Citigroup from a buy to a hold. We also saw Vodafone being downgraded by B of A, Merrill from a buy to a neutral, and also KB. And this, of course, is KB Financial. It was also downgraded today from a buy to a neutral. And I would say it still could move a bit further, but it honestly, tested this area of support, and it now looks like it's getting ready to bounce off. All right, Julius, I think that I've talked plenty here. It's time to bring you back in, and you can go over. I understand you're going to be talking about sector rotation using RRGs. And I have to say that the last time we did our sector rotation segment, Tom and I actually started off by using your sector RRG just to go into the industry groups that I thought looked pretty strong. So welcome back and take it away.
Thank you. Well, it's good to hear that you use RRGs to show sector rotation, because quite frankly, that's what the whole tool was made for, and that's what the reason. That's the reason why it's on StockCharts, because it gives you such a great visualization of all the sectors in one picture. I mean, just to highlight and give you a little bit of background of RRG. It was a tool. It was a visualization tool, primarily designed to give people a higher level overview of what's going on in their markets. And sector rotation obviously is important for a lot of, especially institutional investors, but also retail investors can benefit from having an angle, having a cue on what the various sectors in the market are doing, and benefit from that. For today, I have not prepared anything in terms of educational content, which maybe a lot of people are used to from me when I'm on the show here. But as I'm replacing Tom, who is on a short holiday, I believe he's attending his daughter's wedding, so it's a big day for him. Yes. So really happy that he can go there and enjoy enjoy that weekend. What I thought to do is actually talk you through the current status of the various sectors in the market, and the notes that I have made for myself, and just basically talk you through my ideas, and let's see what happens and take it from there. So right now you see my typical setup, where I have an RRG on the left side on my screen, and charts of individual sectors on the right side of the screen. So on the left, we now have the RRG that shows you the rotation of the S&P sectors, the spider ETFs. That's a very popular RRG, gives you a great picture of sector rotation. And I primarily use weekly charts, weekly rotation. So the setup here is that I use the weekly time frame for these charts to talk you through. So we're talking about a little bit longer term time frame here than you may be used to on Market Watchers Live. So if you think this was going up or down, etc., be aware that this might be a different time frame than you are used to. The way I typically try to do that is I get the big picture here. Maybe you have seen a recent blog from me that was highlighting the rotation between, or the contrary rotation between, staples and energy, the XLP and XLE ETFs. And if we go back in time, oh, let me put that on max so we have everything on the plot. That move started somewhere here, somewhere mid-July, where you see XLP moving inside the into the improving quadrant, and XLE leaving the leading quadrant and moving into weakening. And that scissor type move continued. Here, continued all the way. And it looked really good for staples and negative for energy. But what we've seen over the past few weeks, and beware, this is a weekly RRG, which means that the last observation here is fluid. So if we get a super strong move in XLP today and tomorrow, until tomorrow's close, this position of XLP may change. Not a lot, but just to make you aware of the fact that this position here, the final position, is not graved in stone yet. The other observations, they are. These will never change. But the last one will only be fixed at the weekly close. I was very positive on staples, but what happened over the past 2 weeks is that we see that momentum is already starting to roll over, and XLP is losing power on the momentum axis, and it's actually rolling over while still inside the improving quadrant. And that's not the best picture that you can get. It means that the strength that we had apparently is not strong enough to pull the sector over all the way to the right. So it makes me a little bit worrisome about the strength that's left in staples. And there is a very good opportunity that that staples needs to make an extra rotation on the left-hand side before it can eventually move into the leading quadrant. Now, as we know, staples is a defensive, a conservative sector. So this is, I think, good news for the bulls out there, because this is pretty bullish, because people are moving out of defensives into something else. So I'm going to watch this one very closely. The energy rotation, on the other hand, seems to continue, albeit at a little bit lesser pace. So what we've seen here is that the drop on the momentum scale has come to a halt, and over the past 2 weeks, it's pretty much flat, but it's still moving to the left, so it's still losing relative strength at a stable pace. So not something that you want to pick up immediately. Other things that catch the eye are financials and industrials. They are turning back up, coming out of the lagging quadrant, moving into improving. So these could be very early warning signals. Materials here, XLB, inside lagging, moving further down at stable momentum, so that's not going to be very interesting. In the weakening quadrant, we already talked about energy. We still see technology and discretionary. Again, if we want to make a case for the bigger picture of the markets, staples versus discretionary is a good spread to keep an eye on for general market direction. And we don't see a turn up for discretionary yet, maybe I have to say. So we see staples losing strength and discretionary still in the weakening quadrant. So I'm not quite sure what's going on here. The leading quadrant is a little bit more pronounced, at least where it comes to healthcare, because that, I think, is at the moment the leading sector in the market. If we highlight healthcare, we see a very stable move from improving into leading. It's at a good RRG heading between 0 and 90 degrees, and it's pushing further into the leading quadrant at a stable pace. So we're going to look at that in more detail later on. Now, the way I usually work my way through these sectors is by simply highlighting them on the RRG and then selecting the chart that goes with that position on the right hand side. So if we start off with materials inside the lagging quadrant, and if we look at the price chart, we can clearly see why that is. The relative strength chart, which is this one here, dropped out of a sideways move that lasted for almost, well, good 2.5 years. This was a pretty clear sell signal. The RRG lines already dropped below 100 earlier in the year. Had a little bit of a hiccup here during this consolidation, but then we really started to pick up downward momentum, indicated by the green RS momentum line dropping below 100, and now we have both RRG lines below 100 and still moving lower, which positions the material sector inside the lagging quadrant. If we look at the price chart that goes with it, very clearly the uptrend that we saw since Q1, Q2 2016 was broken earlier in the year. We saw that the old support line that marked the lower boundary of that trend channel has been respected as resistance 2-3 times already, and it looks as if we're now trading inside a triangle formation. Now, as you know, triangle formations can be either continuation or reversal patterns. If I look at this, and if I look at the relative position of materials, I think that the odds are for a break to the downside at some stage, because the ease of movement is on the downside. If we were going to break up to the upside, then there is a lot of overhead resistance in that 62.5, 63. There is the previous high, and there is the former support line still going higher. So I don't think there is a lot of upward potential if we break out of the triangle. On the other hand, if we break down on the downside, there is 55 as intermediate support, and then it's all the way down to 47.50 where we have major support coming in. So I'm still very, very cautious with the materials sector. Okay, Control Tab to the next one. That's energy. And if I go to energy here, like that. Oh, wrong. If we look at the energy sector, again, inside weakening, heading rapidly towards lagging, so definitely not one of the best sectors around. If we start off with the relative chart, we see that that broke below a major support level earlier 2017, and it has never been able to come back above it ever since. The RRG lines tried to pick up some upward momentum, upward relative strength, but that never really materialized, not even in this move that we saw here a couple of months ago during the past months. It's still under pressure from this horizontal resistance and relative strength, and I think that relative strength is holding this down. If I bring that to the price chart, we see that that $77.50, $80 area is a heavy resistance area. It has been tested a few times before, never been able to break out of it. I have this this little opaque shaded line there, that little support line, which was bright red earlier on, as I thought it was a triangle-like formation, and we broke out of it downward, which was like we have a downward break, but then it came back into that formation, and that usually sort of negates that pattern. So I've left that line in as a reference for myself, but right now it looks as if we have a small downtrend emerging that could take the energy price back to, let's say, the 70 area, where we have double support coming off this support trend line, and this declining support that pretty much converge around 70. Again, on the upside, very, very heavy. 77.50, 80 area, very heavy resistance. If we take it out, super strong signal, but given the constellation at this point in time, I think we need a lot more buying interest from the market to make that happen. So not a big fan of energy at this point in time. The financials, clearly a very important sector. A lot of people say that you cannot go higher if financials are not participating. It's clearly a very important sector from an index weight perspective. But I've seen markets rise without financials participating. I mean, the last few months was a very good example of that. Now, if we go to the price chart of financials, we see that weakness in relative strength very clearly here from earlier in the year, where relative strength made a high and moved all the way down to a new low early July. That was picked up by the RRG lines. We had both RRG lines below 100 earlier in the year, and we now see the RS momentum line picking up and peaking just above 100, which causes XLF to peak into the improving quadrant on the RRG chart. What I'm interested in to track what's going on is the development on the price chart, because there's basically two conflicting things going on in my mind. This uptrend that we saw from early 2016 all the way up was broken in this area, but as you can see, it was not very concisive. We had a few weeks where it peaked below, we went above it, we went below, we went above it, so it was not a clear-cut break as you would like to see it. On the other hand, since July, we see that that old support line is now acting as resistance. Almost every week we have peaked against that old support line, which is now acting as resistance, and we've not been able to get back above that level. From a formation perspective, this looks like a falling wedge, which is a positive price pattern, and this pattern has been broken clearly to the upside, so that's a positive signal, and it would actually give you a price target to the start of the pattern, which means a rally up to $30 based on this price formation, but we're still struggling with this resistance area. So I've got a little bit mixed feelings here for financials. Yes, there is upside potential, but it's capped on the upside. Not sure what's going on. If I look at the relative, from a RS ratio perspective, if you measure strength based on RS ratio, XLF is still the weakest sector of the lot. It has the lowest RS ratio reading of all sectors. It's picking up, but still, you know, in the perspective, in the bigger picture, it's the weakest one. So I'm gonna monitor this short-term improvement, because I really think it's a short-term improvement, and I'm gonna try to see whether this move will be able to continue further, or will we see a rotation as we've seen it, or as we're seeing it in staples, where it's going to rotate back before it can hit the leading quadrant. It's an important sector. We need to keep an eye on it. Short term, yes, I think there is a little bit more in store. Can we push it beyond $30, which I think will be needed to seriously improve the relative strength of the financial sector? That I'm not sure of, but I'm sure the market will give us a couple of weeks' time to make up its mind and send us some signals there. Then move to the industrials sector. Pick that one up here. That is just like financials, moving into the improving quadrant, or about to move into the improving quadrant. What I want to point out here is if you look at the individual observations on the tail of that XLI sector, these are all very, very close together. You know, all these week-to-week observations, these little white dots on the tail, they are very close together. That means that that sector can turn around fairly easy. And what we've seen this week is that the distance all of a sudden increased quite a bit, especially if you relate it to the increases and the distances that we have had over the past few weeks. So that's quite interesting from a relative strength or an RRG perspective. Looking at let's start off with the relative charts. This is a weak relative chart. We had RS for the industrial sector moving in a trading range since late 2016. We broke lower somewhere, I think that'll be May or maybe early June. That was a clear-cut signal. This, if you would look at this whole thing in isolation, there is only one answer possible. This is a weak relative chart. That little pullback here is causing RS momentum to move higher, but the question is, how strong is that momentum going to be, and will it be able to pull the RS ratio all the way up to 100 and push it into the leading quadrant? The way I look at it right now, that is not going to happen. This is a clear-cut sell signal, if you want to call it like that. You cannot really sell relative strength, but I mean, if you want to talk in terms of signals, then this would be a sell signal. Long-term range, downward break, pullback, old support becomes resistance, and we get a new move down. That would mean that this momentum move can carry on a little bit further, maybe test that resistance level maybe once or twice before turning back down again. And if we translate that to an RRG chart, and I'm sure you can see that with me, that we can see this moving higher into improving and then rolling back over before it hits the leading quadrant. So it's the second weakest sector from financials if you measure from left to right on the RS ratio scale. So again, industrials, not the best sector that is there right now. From a price perspective, also a little bit mixed. We had this nice uptrending move, series of higher highs and higher lows, and that all of a sudden stopped somewhere in April, May. But again, not with a very clear break. If you would virtually extend this trend line through that price moves here, you will see that it's actually not really respecting that line, which once again indicates how subjective, and you need to take trend lines with a grain of salt. I mean, they're not one-on-one. They're not binary. They're a handy tool. They're a very good tool, but they're not the holy grail, because sometimes markets just don't respect them, and we have to respect that markets are not respecting those trend lines. We had this little downtrend starting, and then we saw an upward break out of that downtrend moving higher, and we're actually taking out a couple of previous highs, which is a positive thing for industrials from a price perspective. Target area around 80, the previous high. So we got a market here that looks to be moving higher in terms of price, but is in a lot of trouble in terms of relative strength. Let's move to technology. Very interesting. Yeah, got that chart. There you go. Technology, biggest sector in the S&P 500. Looking at that relative strength line channel, that's super strong. There is nothing weak about this whatsoever. We had the relative strength moving sideways, causing the RS ratio to come off its highs, with momentum dropping below 100. But if you look, and again, I always measure this in terms of RS ratio from right to left or from left to right. The further to the right, the stronger it is. The further to the left, the weaker it is. In this case, technology is still 1, 2, 3rd from the right. It's still, the third strongest sector, although it's losing momentum. But that means that it's losing momentum inside a very strong trend, and that's exactly what we're seeing here. In terms of price, the technology sector is pushing against the upper boundary, but it has been doing that for a couple of times already. And inside that channel, there is plenty of room for the technology ETF to move lower without hurting the uptrend. So technology is still one of the stronger sectors around. As it is one of the bigger sectors around, it'll for sure help the S&P 500 to remain at least at current levels, if not pushing it higher. What I would like to see now is for this relative strength line to push higher, momentum to turn around and come back above 100 again, which would cause XLK to turn back up while inside leading and moving back towards leading. That would be the ideal situation. So keep a close eye on the rotation of XLK. As soon as it starts to turn back up to the leading quadrant, that'll be a very good time to jump on the bandwagon again for the technology sector. If you're still in there, this is not a sell. This is not a reason to sell. It's just to hold. If you're not owning it, or if you sold the technology sector, by accident, you probably did a good job from a relative perspective. Maybe not from a price perspective, but you'll get another chance to get back in. So technology is still the one to look, and that could actually lead the market higher. If technology will start to turn around and momentum will start to curl up, that could actually be the catalyst for the S&P 500 to really take off again and make another move higher. Staples, already mentioned that when we started. It looked very good a couple of weeks ago. I think it kept the S&P 500 up while other things were coming down a little bit, so people were hiding in it, which is exactly what that sector is used to do. But if we look at the price chart, we saw that break lower. We saw the break out of that new short-term channel, but this one is actually respecting that old support, now resistance line very, very well. And given this move, I think it sort of makes sense if we see some price movement lower coming off that resistance level. And the long-term relative picture for staples, if you look at this move here, is still pointing lower. The move through weakening, yes, it was very strong. It picked it up very nicely, but it seems to be coming to an end right now. And if this continues, then we will see the staples sector rolling over, potentially back into the lagging quadrant. So we'll need a little bit more patience. Again, I think we need to read this as a positive signal for the market as such, because it means that the money that was moving into the defensive is now starting to move out of that defensive sector again and moving into more risk on assets. Okay, real estate. At the moment, the strongest sector, but losing momentum. So from a potential, an upper potential point of view, that is not the one that you want to track right now. If you're still in there, there's nothing wrong. I would definitely hold any positions in there because they're still looking pretty good. From a relative perspective, it needs a little bit of a breather probably. This chart doesn't have a lot of history yet, so we will only be able to see about 2.5 years of relative strength movement on the RRG lines and about 3 years worth of price history. What I do like is the fact that it's breaking out to new highs. That's good from a price perspective. From a relative perspective, we had this first move higher. It seems to be coming out of a longer term downtrend that we saw coming off the highs of 2016. Maybe it needs a little bit more corrective movements. That's what the RRG suggests. Momentum is dropping. This could again be one of the sectors that drops into weakening, rotates back up, and then when price really starts to take off, we will see that relative strength picking up and coming out of this basing pattern, I think I should call it, and really start off a new uptrend for the real estate sector. Oh my God, I was about to talk to 1850, but when I'm on a roll, this takes a lot longer than I always think it would take. Anyway, let's see. Yeah, I'm gonna work my way through it. Don't worry. Utilities, another defensive sector, as you know, shows an interesting pattern. The relative is still captured in a trading range. This year for utilities, pretty much shows like a trading range on relative strength. What the RRG lines are picking up is the improvement coming out of that down move. So this trading range is an improvement over the down move that we saw in relative strength in the second half of 2017. Question is whether that will be able to move higher. It has to come out of the price, and what we see there is that the price broke out of a basic formation, pretty much you could call it a double bottom, I guess, although I'm not a big fan of calling this a double bottom because it's not really, it's a higher low. It's not really the end of a downtrend. Double bottoms are usually the end of trends, and this is only one leg of a move. So I probably call this a higher low compared to this one and compared to the ones here late 2015. But nevertheless, it broke out of this consolidation area and is now targeting the area around that high just below 56. Upward potential probably bigger than downside. Downside well protected at this former breakout level around 52. I'm kind of in the middle for utilities. It looks good from an RRG perspective, although the trail is not not really going anywhere. It's inside the leading quadrant, but it's jumping all over the place, where you would like to see nice round rotations, curves going into one direction. For utilities, I think that will happen when we get either one of two things. We can have a break in price above 56 with follow through with a rally. That would most certainly pull relative strength out of his trading range and start to move higher and really push utilities further into the leading quadrant. Or we would see this meandering higher and relative strength staying inside that trading range, and RRG lines just moving around that 100 level without taking any direction, which makes me cautious to take any positions there. Again, from a bigger picture perspective, this is a defensive sector that's not sending us very clear signals, especially not from relative strength, which I think should be taken as a positive for the market as a whole. You may hear between the lines that a few of the reservations that I had when staples started to move higher a couple of weeks ago and utilities started to move into the leading quadrant, I noted that could be a risk for the market. That risk, I think, is now fading away, where a couple of other sectors are picking up steam again, and we see the S&P breaking out to new highs in a couple of other sectors and a couple of important stocks as well. Let's quickly move to the healthcare sector, which I think right now is the best bet in the market, the best sector in the market. You see that it just broke to new highs. It broke that resistance just above $90 with no hesitation whatsoever, which is always nice. It's a very clear-cut break. That level is broken. There's no doubt of it being broken. And there is plenty of room to move upwards for the healthcare sector. If we switch to the relative strength picture, then I think we're at an important level there. We see this big red line coming down, which connects all the major highs over the past few years. We see the high of the horizontal level that's coming off the high of earlier this year, and these two levels are now sort of converging. Also, on the low side, we have tested the lows that we saw in the transition from 2016 to 2017. That's been tested a couple of weeks ago. It held up very well, so it looks like we're basing out here and we're starting to move higher. If we take out this area here on the relative strength line, RRG lines are already taking an advance on that. It's pushing the sector into the leading quadrant, but especially the break in price higher, which opens up a lot of upward potential, and more importantly, it protects the downside to around $90. So the downside risk here, I think, is about $3, which is almost nothing. This is a very interesting sector to watch at the moment. I'm quickly going to go to the discretionary sector, which is the last sector that we want to cover in this segment here, the discretionary, the cyclical stuff. Showed you the rotation earlier on. It's inside weakening, but it's not really pushing further. And if you look here, you see that discretionary has been pushing to new highs. It took out that previous high, little high-low test, former resistance as support, and now taking off. It looks as if a new higher low in relative strength is being put into place. So I am watching this very closely for a pickup in momentum. This is a weekly RRG, so it takes a little bit of time. But I wouldn't be surprised if in the coming weeks the discretionary sector is going to show us a similar pattern as staples, but then in the other direction. So discretionary curling up inside weakening, where staples is curling down inside improving, which pretty much would support a bullish case for the S&P 500. Can I have one more minute, Erin?
Of course, Julius.
Okay. I don't have to talk so quick. I wrote a blog earlier the week, and I highlighted the healthcare sector because I know, especially highlighting what I just showed you, the move of XLV into the leading quadrant at a very strong angle. It's basically the only sector at the moment that is rotating like that. And one of the stocks that absolutely caught my eye here was Pfizer. Actually, it was two: Pfizer and IQV. And the cool thing, I always try. If you read my blogs, you may have noticed. If you didn't until now, you may want to be interested that I try. I'm not. It doesn't always work out, but I try to always link my charts in my blog to live versions. So this is the picture that was as it was when I was writing the blog. And if you click on the live version, it will open up the RRG updated to now, and you will see that all the settings are as they are in the blog. So if we go to, and it will open that up in a new page. So you will still have the blog open, and it will open the chart in a new tab, which I think is very nice. So you don't lose track of the blog if you're reading it. So that is still going strong. And if I then, there's a couple of more charts in there. You can go there if you want to see it. This is the chart of all the members of the healthcare sector. Again, if you open it up, that's the chart as it was when I was writing my blog. And if we now go to the live version, you will see the current rotation. You'll see that some stuff has moved over. Pretty much easy. Go to the controls, click fit, and everything will be back in place. And if you are not aware of this little trick yet, you can highlight the stuff that you're interested in. And here you see PFE, and that's nice to see. Let me see. Can you? We see that this move here is now actually extending. You see these little dots were quite close to each other. Let me zoom in this a little bit more. And now this one is moving away. So that's good news actually. So it's extending there, moving further into the leading quadrant. Let's see what the chart itself is doing. These were the weak ones. Quickly go through Pfizer here. Again, this was the standalone RRG. This is the chart that I had up there. And if we see the live version, we see the live version of Pfizer. And you see that nice breakout that we had out of that rising channel, followed by that sharp move higher. It's coming off a little bit now, which is, well, not surprising, I guess. But also, more importantly, it's not a problem. I think it's actually giving us a good chance to get back in, because this actually could extend towards the 40 area without any problems. It will not change the chart. It will not weaken the chart. It will actually give us a little bit nice pullback to get back in if we didn't want to chase that move higher. The higher the low comes in above that rising resistance line, the better it is. And we see a similar pattern in relative strength where we have a little bit of a triangle formation. We broke out of this very, very nicely. RRG line still moving higher. So I think that Pfizer, which is the third largest stock inside the healthcare sector, will be one of the drivers to drive the healthcare sector higher. Clearly, me being Europe, not super familiar with all the whatever 10,000 stocks that you guys have there in the US. Pfizer, I know. One of the stocks that I didn't know, I'd never heard of, was IQV. So when I saw that popping up on my RRG, let me quickly show you where it is. Here it is. IQVIA Holdings. It's a healthcare provider apparently. I thought this was a very interesting move. You know, it moves like Pfizer. It's a little bit further ahead of the game already, but it's still gaining on both axes. It has a strong RRG heading. So if we open up the live chart for IQV, I don't even know how you pronounce that, then this is what really got me ticking, is this nice flag formation. This is a nice high and tight flag. We had this move higher, we had a correction, we break out, we got a super nice rally, and then we have this 1, 2, 3, 4 week correction with a nice breakout higher, and we're now challenging that previous high. If we apply the rules for a flag here, I think that pretty conservatively we can say that this is a move from 100 to 125. That's 25 bucks. And if we take a conservative measurement, I'll take the low of the flag, which is 120, and add $25, which gives me a 145 price target. With relative strength improving, I think that could be a nice little trade to go through. And then I'm going to leave it at this, Erin.
Okay.
Yeah.
Right. So here's what we're going to do for 10 and 10, and we're not going to have time for all 10. I know that. So I have sent, here's the summary slide for what Julius looked at. And I've sent you, Julius, an email, the link to the 10 and 10 requests. So we'll go ahead and have you pull those up and pick from the RRG a handful, and then I'll just go through what I can before we finish it up. So the first one, though, I did already pick. It's going to be IBB. So I'm going to go ahead and do that while you're getting that chart list together to give us some of the
I'm afraid I have some bad news. If I open that link, then that doesn't work for me.
I had to try it through the email, and if not, I can resend it.
Ah, okay. So if I open up my email, okay, you do your thing. I'll see if I can get that that link from you.
No problem. Otherwise, I'll just pull them up and we can look at it through my screen.
No problem.
All right, so the first one is going to be IBB, the biotech ETF. This was requested yesterday, and that's how I usually pick our first symbol. I look at one that we didn't pick the previous day. So this was one of the ones we were looking at, and you could see we were actually getting that breakout yesterday. So that tells me that, you know, it's probably why we were getting the request. I would note on the chart the PMO buy signal that's coming in as we get this nice breakout on the biotech ETF. And then notice the OBV. It's everything is really confirming this particular breakout. And I'm going to just show you how to annotate with the arrow there. And you can see also the scooter has now moved right back up into the hot zone. So again, rather than chase, I would hope to see a little bit of a pullback on this one. But I think the biotechs are still looking very strong right now, especially when you look at this on a daily chart. So that is going to be, I'm going to save this so you can see how you can do this very quickly. And I'm saving it. And this is where I put them all in. The Market Watchers live chart list is exactly like this. And I'm going to give it a number. And then we'll go ahead and copy this and upload. So it'll be right there. And when I'm done with these, they'll be right in there. So did you want to share your RRG? With your picks?
Yeah, I just opened it, so I'm looking at it right now, but let me grab the screen and then we'll quickly toggle through all these names and you can jot down the ones that you want to go over for the 10 and 10.
Okay.
Let me grab that. There you go. You should see my RRG now. So today's 10 and 10. There's the header. Okay, now here we go. PRAH. Don't like it. It doesn't seem to come through inside leading, so we're gonna skip that. Same for this one. I don't like that very much. CCI. It's very close to the benchmark, so it means that it's moving in line with the market predominantly. Not a long tail. Let's see if there is any other stuff out there. Same for this one. This could be an interesting chart to have a look at. So let's look at SYMC because it's moving almost vertically on the RRG there. So let's see what's going on there. That's a chart that I'd like to inspect a little bit further. So are you noting them down, Erin?
I am.
Okay, SYMC. PBR, interesting. Vertical move, nice, long tail, big differences. Let's see what's going on there. This one as well, BIG. Not the big differences, but the heading is nice and it's stable. It seems to be moving stable. So let's see what's going on there. Same for what's this? Walmart, I guess, right? I like the heading. that's the reason why I'm picking this, because the heading is nicely. It's gaining on both axes at an almost 45-degree angle, and it's close to moving into the leading quadrant.
Okay.
Let's forget this. You could have a look, but let's see if we can. If this is a backup, Yelp is a backup.
Okay.
If we don't get to 10, this is nothing. It's just moving there. It's nothing there. This one I want to look at for negative reasons, because it's so far away from everything. I want to see what's going on there. I suspect it had a very, very big move, and it's now rolling over. But what I want to see is this something that is likely to roll over? So we're in a temporary setback, and we can move higher. Which, look at the range here. Look at this is 150. That's an extremely high reading for RS ratios. So I'm very interested to see what that thing means.
Okay.
This one again. This one is also from negative reasons, because this is heading quickly towards the lagging quadrant. So I'd like to see what's going on here. Maybe we need to get out of this one. This is a stable stock going higher. Amazon, super. Look at this. I mean, if you look at the trail here, this is just rotating around here, dabbling around. This is an example of a short tail, relatively high RS ratio, with a little bit of momentum. Just doing its thing and moving higher. I think we've already looked at Amazon, by the way, earlier on. So, I'll quickly go through this one. NUS, from a negative point of view, seems to be entering lagging, so it's giving up.
Mm-hmm.
Oh, here, Facebook. Oh, somebody asked me about Facebook. So let's have a look at Facebook, and I'll give my 2 cents about that later on when you do it.
Mm-hmm.
Oh, that's weak. Look at this one. This one is a good example of TRXC on the other side, potentially. So this is an example where we had a move higher. So this one moved up, then all of a sudden turned around and moved into lagging again. So this one is, I think, working its second leg lower in a relative downtrend. So you might want to look at that.
All right, we've got
here. And AG, this is also an interesting one. From the RRG, I'd say avoid it, but curious to see what you have this. By the way, this is a weekly RRG to mention, so this is longer term moves, which might contradict the short term stuff. But that's where you want to bring in the daily and the weekly to see if you can match the two together and get the strongest of the strongest. How many do we have?
Right, we have plenty.
Okay.
There we go.
All right.
I have at least 10. So
yeah, go ahead. Go ahead.
I'll see how far I can get through.
Yes.
Our agree-disagree segment, can be very short. So I think this is more instructive anyway to do this. So I'm going to go through them quickly. This is only to show you how quickly you can.
Isn't that the idea about 10 and 10?
Yes. So we're going to go. We're going to annotate and save very quickly here. All right. So SYMC. It's in a pretty boring trading range at this point, I would say, or has been. I could put it up in here. It is making its way back toward the top, and I do have that PMO buy signal here that I think is interesting. And then, of course, look at that OBV volume is just rising with this rally. So I would say that is a positive to see that kind of volume coming in on this rally. I would probably look for it to get back up and at least test the top of that trading range. I don't think it looks good enough to be looking for a closure of this giant gap down, but I certainly could see it moving to the upside that way. Okay, and that one is going to be number 2 of what we looked at. All right, next one up I have is PBR, and let's go annotate this one. And again, the trusty support and resistance lines are just the best. So, of course, this is a near-term top. Kind of lines up. It's a little bit lower than that gap that came in previously. Here's some short-term support and previous overhead resistance. It's looking like it's getting ready to test that support area again. But look at the PMO. It was looking okay. It was turning back around, but now it's starting to try and fall again. So I would just make a note of that. OBV still looks good. Not particularly happy with the way the scooter is really flat in that where it is in the basement. So there we go, and that will be 3. And the next one, let's see, big, B-I-G. Big lots. All right. You know, this one looks pretty good, but look at that PMO. That's just not what I would want to see. If I were holding this, and somebody had asked me about, I can't remember which one it was, but if I were holding this and I saw this sort of a turnaround on the PMO, I would be considering myself out. And right now, it might be a good time to do that just because you can see where this short-term resistance / support also lines up with this gap, was not able to close the gap and is pulling back. And look at the PMO, I would be getting out of that. So, okay. And I think this one was number 4. Number 5, let's go ahead and do that, and that will be Walmart. We can look at that one really quickly. Let's see. All right, first thing up. Okay, I'm looking at, actually, I'm going to highlight the PMO here. It has been very flat, and you know, really, when you look at a price decline like that, and then you know a flat PMO that is not moving lower, I think that's actually good news. The problem is, you know, the signal line is starting to climb here, and we could end up with a drift, you know, PMO sell signal. I want to look at this support and resistance very quickly. Here's your gap. All right, it has not closed yet. It looks like it could be on the way to do so. But like I said, I actually do like the fact that that PMO is flat even within this decline. So, you know, this is one I'd probably sit on a watch list. I can't get overly excited about it, but I think that's just something interesting to note. And that was number 5, right? 5V. 6, we'll do, let's see, TRXC, which is one I know that we were looking at in more of a negative. You know, actually, I like this chart, and here's why. I've got the PMO buy signal that has just come in near-term oversold territory. You got the bottom above the 0 line. Of course, you have a really nice, strong rising trend here. It's rather steep. Not so sure it'll be able to hold up with that particular steepness. And let's get here's the upside. Whoops, come back here. So that's overhead resistance at the previous top, but we are breaking out above this more intermediate term support. What did you think of this one? Remember, it had sort of negative connotation on the RRG, but I think the chart looks fairly decent here. There you go.
Yeah, that's the one. That's the one that had that very wide rotation. So it's losing a little bit of that strength. But that's what I said. That's why I'm interested to look at it, because you had the wide rotation. So from this, I agree with you. This looks very, very strong. It seems to be breaking out on those previous highs. We only need to take out that level around, what's that, $6 for it to move higher. So you know, that then in that case, that RS ratio around 150 is going to roll through weakening and then all the way back up and picking it up again.
Yeah. Okay. Right now, I'm seeing this really punching up right against this resistance area that we see at that March top. I like this PMO setup. I would watch for the breakout. I don't think that I would get in until I saw somewhat of a breakout. But you can see 5-day EMA is just getting ready to cross above the 20-day EMA. And then I will make this filled in like that. Okay, I keep doing that because that's what I always do. for saving. Okay, and this was number 7, and we're getting on 10:15. So I think I'm going to pick one more. Let's go with that. And let's see, we were on, well, I know everybody wants to see Facebook. It's always a popular one, so let's take a peek at this one. All right, we're finally getting that PMO buy signal here, and I think that's certainly good news for Facebook, and it is coming in oversold territory, but that low, that bottom on the PMO, we're seeing a higher one here. I also am looking at a reverse divergence that is positive between the PMO and the price bottoms. Now remember, usually you're looking for rising bottoms, but when you start with the indicator and you end up seeing declining ones while you're getting rising, that's considered a reverse divergence, and that in this case would be positive. So honestly, I would be looking for a test up here of that previous top on Facebook. All right. And that, I think, concludes it, because that'll give us some time to do our agree and disagree. Thanks, Julius, for picking those out. We'll plan on doing that again tomorrow.
Yes. Let me quickly add, Erin, because I've been looking in the chat box with the questions. There's quite a lot of quite a few interesting questions for which we will not have time today, but as I will be back tomorrow, I will definitely, I've just asked the moderator to save those questions and send them to me. So I will definitely address those questions tomorrow. There's one about quick moves north, about sharp angles. Someone said, can you bring back the slide that you showed on ChartCon 2016? Where if we can use RRG to determine where we are in the business cycle, which is something I sometimes do. Can we do RRG on market caps? So quite a few interesting questions, and I promise I will get those questions and I will address them tomorrow in let's call it my segment, if that is a thing. But anyway, then, and I will address. So it's good, because then I actually know that I'll be talking about something people are actually interested in, which is a lot nicer than just me thinking that you are interested in something.
All right. Excellent. So let's go ahead and we'll summarize the 10 and 10, the symbols that we did end up going through. And there you go. And as you saw, I annotated them. They're already now in the Market Watchers live chart list. So you can go there right now and copy those charts to your own chart lists if you're interested in doing so. All right. It is time for our final market update. So let me go ahead and get that prepared for you. I want to look at just what we're seeing as far as, let's get this updated right here. All right, so as you can see, the markets are trying to make a move back to the upside. Dow is still lower, down a little bit more than 54.5 points. S&P is down 2.5 points, but is rising. And we can see now we've got the NASDAQ and the OEX both in positive territory, and Russell 2000 also now in positive territory. TSX is mostly unchanged, but up about 50, half a point. And we can see TNX treasury yields are starting to rise back up again, but they are still lower on the day, reading 2.871%. UUP, big gap up. We're getting ready to talk about UUP and the dollar and agree or disagree, but gapped up mostly sideways. And we can see gold gap down somewhat, and then is also moving mostly sideways, currently down. We've got 113.51 cents for GLD currently. And USO continues its nice rally, moving higher, currently reading at 14.75. I've been writing about USO, and yesterday I told you that my target, I think, is about $15.60. I still think we're going to see more action to the upside out of oil. And the VIX, we had seen a reading almost up to 13, but we're now pulling back a little bit here on the VIX, and the reading is 12.63. And that concludes our market update. Oh, I never shared my screen. Well, you got the actual information. So here you go. Dow making a move back up, S&P moving higher, NASDAQ higher now on the day, and S&P 100 And then the other one I was wanted to note especially would be the rising trend here on USO continuing to the upside. And that concludes our final market update. Let's go ahead and get started. We have about, oh my gosh, about 5 minutes to do our agree or disagree. So let's go ahead. And the question or the statement today was about gold, actually. Gold will test the 2018 lows around 1150 by the end of September. So basically, are you bullish or bearish on gold? I'm just going to go ahead and give you a really quick look at what I'm thinking, and then I'm going to pass it back to you to let me know what you're thinking. I have been really in the camp of gold moving lower, despite seeing a lot of good signs on the technicals. I mean, I have a PMO buy signal here. You know, it's still fairly coupled closely in a reverse divergence with the dollar. So, you know, the dollar is starting to struggle, but the thing is with the dollar, and that's why I want to say that I don't think I'm not thinking that gold will. I think that it won't test those lows. I think it is going to move higher. But the problem I'm having right now is seeing the dollar starting to bounce up off of that rising bottoms trend line. But I have the sell signal. Look at OBV is negative. Scooter is negative. I just can't go with gut feeling that the dollar is going to start rising again because the technicals are just telling me it's not. And I would be watching these volume bars as well. If we continue to see sort of a decline in volume as UUP starts moving up, I would think that you're going to see that breakdown. I'm still looking for the breakdown on UUP. So consequently, I would say gold, we're looking at more than likely a rise because UUP, if it does break down. So I'm looking for a move up to the 1240 area based on the technicals currently for gold. I know that Greg is super bullish on gold as well. So I would say that I disagree that gold will test the 2018 lows at the end of September. What say you? And you have 3 minutes. 3 minutes.
Yeah.
And I'm going to
you fooled me. I thought you were gonna say that's actually what I thought that statement was your thought, and I thought, hey, I'm disagreeing with you.
Good. Well,
but now that I've heard your explanation, I actually agree with you.
Okay.
Because I do think it's going to go higher, and 1240 is exactly the point that I had in mind. If I look at you know, quickly the price chart here, that's a big range. To me, it looks as if we're in that 1180 area, 1190, 1170, 12. That's been an area that's been tested a couple of times. We have one straight move down. It's very unusual for a market to continue lower at this pace all the time. And if we move that to a shorter term chart, then it looks as if we actually have broken this downtrending resistance line. We're now challenging this 1220 area. If we break that, we can go all the way up to 1240, maybe even a little bit higher. And especially if I bring in a couple of classical technical indicators like the MACD and the RSI, especially the MACD, we see a very nice, you know, positive basing divergence. I think that 1240 level is actually a level to watch. If we put in a new high there, we might go lower, but it'll be interesting to see if we can push it all the way lower, or that 1170 low of the range will be the big support level, maybe that Greg Schnell's looking at, to bounce off to have a major rally in gold. We'll see about that. But the statement was for the end of September. For the end of September, I don't think that we will see those lows. I think that we'll go a little bit higher.
All right. Well, let's see what the audience had in mind with the poll. So we'll have that brought up. So we both basically disagree. We do think that gold will move higher and will not test those lows. And interestingly, just a little over half agree that we will test those lows. So like I said, I mean, I've had this gut feeling that the dollar is going to be, you know, rebounding. And typically if the dollar rebounds, you're going to see a decline in gold, but I just can't support that with the technicals. So, and I am a purist as far as the technicals. So I am not going with gut. I'm going with exactly what's on the charts. And the charts are telling me that we're going to see the dollar start to fail again. And that gold, yeah, 1240. I think that's a good area to look for it. And I know Greg is actually had invested quite a bit in that gold miners. He's in the metals right now because he was telling us that, you know, this is the setup you wait for. This is a great setup. And, you know, of course, Tom was like, I won't touch metals with a 10-foot pole because he just doesn't ever do that. But are you surprised by these poll results? Oh, Julius?
Yeah, sorry. I was reading something that I didn't understood in the chat box.
Oh, no problem.
I got a little bit distracted.
Yes, are you surprised by these results?
Get them back to me. Agree.
Yes.
Okay,
yeah.
so
I mean, I'm sort of surprised that we had half of everybody moving into that.
Yeah. So what is? Let me get back in line again. So the audience thinks that we will actually move to 1150 lower.
Yes, half.
Okay.
I was
interesting.
And
let's make a mental memo of this and invite all those people back at the end of September to Market Watchers Live, and see what happened.
Exactly. All right, so there you go. Actually, you've got it wrong. We both, Julius and I, both disagree with that statement, and the live audience agrees. So pretty interesting. I'll get that amended summary slide up in the Market Watchers Live recap. See, we're already changing it right as we speak. Okay. You know, Julius, it's been absolutely a pleasure to have you on. And, you know, we do always have our schedule with the times, but, you know, to me, when we have a guest, if you're flowing and things are going great, we want to go forward with it. Tomorrow, I can't wait to see what you have to say as far as some of the questions that have come in. We kind of can make it more of an open mic Friday.
I've tried to answer a couple of them, but I've just asked the moderator for the chat to save a couple of questions because there are a couple of very interesting questions that I want to address tomorrow. And just two more came in, which I will read up on further. So I'm sure we'll have plenty of stuff to discuss tomorrow around RRG and other things. Yes. Looking forward.
Yeah, and we'll see if we can start the 10 and 10 just slightly earlier with your RRG. And well, it's fine.
Like yes, I'll try.
At least when I'm in charge, it's free flowing. That's the hippie chick in me, I guess. All right, you just saw the upcoming schedule. You do want to tune in tomorrow for sure. Julius will be back as my co-host because Tom will be the day before his daughter's wedding. So obviously he won't be in tomorrow. We wish him and his daughter all the best. You know, I want to thank all of you, including Julius, for being with us today. Please remember to complete the survey as you exit. Would love to know your thoughts of, you know, what you thought of Julius's RRG, you know, the 10 and 10, how we did it, all of that. Just go on into that survey. We want to hear your opinions. We love to get that feedback and hear what you think. And as a quick reminder, Market Watchers Live does air 5 days a week, Mondays through Fridays, from noon to 1:30 Eastern Time. Have a great afternoon and evening, everyone. We'll see you back here tomorrow, I hope. Happy trading.